ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Hey, now we are live. Welcome back to the morning show. I am your host, JC Parets. I am joined by my man, Steve Strazza. Fonz on the ones and twos. Izzy in the house. Spencer Israel out today. So the boys will play. Get ready. We got a great show for you. The bull market rages on. Conference call last night. We got the over. I think it was like 165 charts, 170 charts. I got to double check, and we're going to get into it right now. Welcome to the morning show. Let's go. Strazza. I had a moment last night. I had a moment.
What happened?
And I'm kind of proud of it. I'm kind of embarrassed by it, but I had a moment, and it was real.
Let's hear it.
So I caught myself like talking about 2003 and 2004 and 2000, and I started thinking to myself, I'm like, wow, so that was 24, 23, 25 years ago, depending on what we're talking about. Let's call it 20 years for argument's sake. I remember vividly in 03, 04, 05, talking to the old timers when they were talking to me about the late 70s and the early 80s, right?
Black Monday.
And it kind of hit me last night, like 1987. It kind of hit me last night, like 20 years ago. I used to think that was so long ago, right? Like, wow, this guy was around in the 80s. He's so old. And I started doing the math. I was like, oh, shit. That's me now, right?
You've been here for some time.
Wow. So it's when I'm talking to people about things that happened 20, 25 years ago, it's like early in my career, people talking to you about the late 70s and 80s. And I didn't realize it until last night. I was like, oh, wow. That's me now.
You're a veteran now.
Wow. But I hadn't put two and two together that it's literally the equivalent.
How many cycles gives you enough experience?
The more the better, I'll tell you that much, because everyone is different, Everyone is different. They're all frustrating in their own different ways. But what's most frustrating is I realize I'm the old guy now. I'm the guy that these young kids are like, wow, you were there for the great financial crisis? Wow.
Does anybody stand out, those stories that you used to hear earlier in your career, particularly from like the technical community that you remember talking to or listening to or reading back then? Who was talking about those periods?
Yeah, I mean, the usual suspects, Alan Shaw, Luis Yamada, right? Phil Roth, Ralph Acampora, the old timers that, we're friends with. I mean, just, those are the classic stories, because a lot of them, like you asked Luis Yamada, oh, the bigger the base, the higher in space. Where'd you learn that from? Oh, I learned it from Alan Shaw. Then you go to Alan Shaw. Alan Shaw, where'd you learn that? Oh, I learned it from Bruce something or other. And that guy learned it from somebody. Like, these things have been passed down over generations. And here we are in 2023, 2024, looking at crypto charts, talking about the same, psychology and human behavior, the death of equities magazine cover and like in the late 70s. I mean, this is,
You were on a Spaces. I snuck in. I listen in incognito mode sometimes.
Last night?
I don't want to get called up. No, it was like last week. You've been doing these late night Spaces. I don't know what's going on, what's wrong at home, but you've been doing these like 9 o'clock Spaces.
Yeah, because you know why? Because everybody goes to bed and I'm up charting. And usually I listen to music, but sometimes I'll see that there's like a space on and I'll just listen in while I'm going through my charts. And then they're like, oh, JC's here. Let's call him up. I'm like, all right, I'll come up. I'll pour myself a glass of wine and chat for a little bit,
So there's a trick, right? Because you probably have this problem 10 times worse than I do. If you want to go into a space and not run the risk of being called up, they let you listen in incognito mode now.
I know. I when you said that, I was like, oh, shit, I should probably start doing that. Because sometimes I feel bad. I was like, oh, all right, I'll come up.
So somebody was saying to you about how good the technical analysis works in crypto. if it feels like it works better in crypto than the stock market, I promise you there was a time, probably when people like Alan Shaw and others that you just named were practicing, where it was that good in the stock market too, right? Less whippy, less choppy.
It's not the technical analysis is good or bad or better in one and better than the other. It's the practitioner, right? It's not technical analysis fault that you suck at it. You know
But
what I mean?
it was funny to hear that this person accepted it for crypto, but not for equity markets. It's the same
Because
thing.
these people are so dumb, they don't realize that all we're doing is applying the same principles and strategies that we employ in traditional assets and TradFi, if you will, and incorporate that into crypto. And speaking of which, it's Crypto Friday. Why don't we get into the state of the markets? Izzy, hit it. All right. I like Izzy on the ones and twos. I'm not going to lie. So last night, conference call. Big deal. We got the over. Did we get the over?
You were quick. I thought you were quick. I actually, when you wrapped up, I looked at the time. I said, "Huh, that was fast." I think it was like an hour, 15 minutes.
You consider that quick?
Charts you had, let's see,
166 after the disclaimers and agenda. 163.
Yeah. So it was over.
163. So we took the over. I figured it'd be the over because these mid-month conference calls, they tend to have more charts because we dive deeper into stocks and industry groups and stuff, while the monthly candles is fewer because we're really just taking advantage and zooming out. You know?
Oh, I know.
I kind of had inside information when I took the over there, as you're well aware.
Why are you pumping this Paddy Power thing?
The who?
We're DraftKings people.
What are you talking about, Paddy Power?
It's FanDuel.
What about it?
The chart.
What about it?
DraftKings is better.
Nobody said it wasn't. Who said it wasn't?
You
don't like that I just added that in there?
I just thought, wow, an Australian ADR.
Yeah, because it's FanDuel. So we're talking about DraftKings. I find it interesting that there's the FanDuel is an ADR from Australia that's based in Ireland. I think that's interesting, and maybe somebody else does too. Clearly, you do not.
Well, because the trend is lower for them. They were number one. DraftKings took the top spot from them last year.
Nobody's denying that. Nobody's arguing here with you. I'm with you.
We're gonna have Paul. Yeah, no, I know.
You're taking this very
No. I was just reading through two reports. Actually, there was an upgrade and a downgrade for DraftKings. I was just looking at the Stifel report, but we're gonna have Paul LaMonica on to talk about it. I think it'll be a great conversation. Spencer,
nice. Quickly, I want to just do a quick rundown. Dow futures up over 200 points this morning, with 30-year bond futures in the green as well, as stocks and bonds continue to move together. S&P futures up about 25 handles, about 50 basis points. NASDAQ 100 futures up 75 basis points, about 130 points. Gold's up 1%. Silver is up about 30 bips. Copper up 1%. Oil flat as the dollar is coming off. Volatility back under 14. And U.S. 10-year yields hovering right around 4.1%. Over in the old funny money, Bitcoin up this morning a little bit, pretty much flat, right around just above 4,100. Ethereum up about 1%, just under 2,500. Big winner continues to be the Ethereum Bitcoin ratio, no question. It was the big winner on the announcement of the ETF for Bitcoin, or the 10 ETFs that were approved. The big winner was Ethereum over BTC, held its gains nicely. This thing's, I think, going higher, right? Choo-choo, motherfuckers. It's going higher, as they say, right?
I do think so, but I think first it might go lower. The altcoins are like...
The ETH BTC is going to go lower.
Oh, I thought you were talking about ETH on absolute terms. No, I think
very
ETH,
impressive.
I think ETH keeps outperforming a little bit here. But I'm looking at the altcoins on an absolute basis. They're kind of teetering here with some short-term tops.
All right. Izzy, why don't you hit up slide 2 here? Let's go over the Fab Five. I think this is it. Anybody over the last year who's told you we're in a bear market has been lying to you. These same liars are telling you the same thing this year. I don't know. Maybe they're looking at their charts upside down. Maybe they're looking at them blindfolded. I don't know. But these are the Fab Five, right? Time out. These are the Fab Five semiconductors, making new all-time highs above the prior cycle's peak. When you look at things like the S&P, the NASDAQ, look at the German DAX, a lot of these indexes are back to their former highs from late 2021, early 2022. And the question is, what do these indexes do, right? What do they do? If you're looking at what these five are doing, I think it's going to be a good indication of what those indexes are going to do as well. Semiconductors, new all-time highs, back above those former highs. Keep going, Izzy. Industrials, new all-time highs, above those former 2021 highs. Keep going. Technology, new highs, breaking out above those 21 highs. Keep going. Broker-dealers, we don't have bull markets without financials, breaking out above those highs. And finally, home construction, right, above those former highs. So when you look at these other indexes that either they're right there or they haven't decided yet or whatever it is, I think looking at these groups, I think are a huge indicator. Broker dealers index, homies, semis, industrials, technology, right? And I'm going to reiterate, and I mentioned this on the call last night, Strazza gives me some pushback that I'm including both technology and semiconductors. But I do that because they're both important and they're both very different, right? Are you with me on this one now finally, or no? You're still pushing back?
It's not that important. They're going to do the same thing.
Technology, 30% of the S&P 500, 50% of the NASDAQ, Microsoft and Apple, two biggest companies. That's the XLK. And then
I get it.
Something else.
XLK, you're looking at Microsoft and Apple, which I think is important. And then semiconductors, you're looking at
semiconductors.
The most important group of stocks in the world. Yeah.
Wow. So it's not, hold on, it's not software.
I've been very consistent in what I say about these two groups. Software are the best stocks. Semiconductors are the most important stocks.
Wow. I like that distinction. I'm not going to lie. I like that distinction.
Our buddy Josh Brown was on one of the networks yesterday making such a fantastic point, as he so often does, about Taiwan Semi, just as a company, just a single company might be the most important in the world. He talked about if that company shut down for a single day, the supply chain problems that would ripple through the world would be just wild. And there's a lot of that in this group. So they're very important.
I like that. I like this. I like that gap and go in Taiwan Semi.
And it closed like at the highs yesterday. Just great.
And it opened above 110.
Yeah.
So that's that gap and go that we're talking about. And one of my favorite trades because, like, yes, it's bullish. Obviously, there's nothing bearish about it. But for me, I'm more interested in what is the market going to have to do to prove to me that I'm wrong.
Yeah.
And in these gap and go scenarios where it gaps up above resistance, like Taiwan Semi at 110, it's an easy out. Yesterday's low. That's it.
That's as good of a gap as you're going to get. It's at a key polarity zone. They, if you want to look it up, they'll call them a breakaway gap in the books. It's so bullish.
I like how you keep quoting textbooks all week. Like,
there's a lot of.
Have you been digging in? You've been digging into your old textbooks?
It is actually right here.
Which one?
Level 3.
Are you ever going to take that test?
It's the second time I've been asked this in 2 days.
Tyler Wood's always like, when are you going to get Strazza to finish his level 3 CMT? And so most people are usually like, wait a minute, Strazza's not a CMT?
I know. He actually was saying that to me like 2 days ago. I was talking to him about
Tyler.
We're going to see him next week. Yeah.
He's coming to dinner. Shout out Tyler Wood. If you don't have your CMT, you could join the rest of the team and complete yours before Strazza does.
I told him I need some. Yeah, it'll happen. I told him I need to take a sabbatical or something. I told him to bring me some fresh CMT gear.
Start representing. They got to step up their gears. What they got to do between you and me, but that's another story.
Yeah. We'll talk. We'll talk at dinner.
What stood out from the conference call yesterday, you think, the most?
Thanks for all the compliments about my shirt in the chat, guys. This is actually from Vietnam. This is Vietnam golf gear right here. I'm getting out there today. What stood out?
Please don't encourage him.
What stood out from the call? I watched the whole thing. Muted Kramer for you. I thought it was excellent. I thought how you ripped through a lot of.
You just say you muted Kramer for me?
Yeah, I chose you.
Do you normally watch Jim Cramer?
Guilty pleasure.
Are you serious? You really do?
Dude, Kramer's
that's how you spend your 6 o'clock?
I like to know what different companies do. And Kramer, say what you want about him. He does an excellent job just like digging in interviewing CEOs, talking about like these different businesses. And then when you look at the charts, you say, oh, it's that one. They do the RFID badges or whatever. And you know kind of what's behind the chart. And I think that's good.
Anyway, you do what makes you happy, brother. So what stood out?
Currency heavy.
Oh, did you like that or too much?
It was different. Listen, you always do a nice job of bringing different angles. And I thought it was good. If we get breakouts in some of these emerging currencies, and I don't look at the Colombian peso. So that was a new one for me.
You don't look at the Colombian peso? Maybe you should.
I should, because I've been looking at
I put them in alphabetical order, so it's usually near the top for me.
I've been looking at these Colombian stocks, that CIB and even the index GXG. I really like the chart patterns there. So if the peso is also moving higher against the dollar, then that's good. I like those trades even more. So yeah. Totally.
We got follow through yesterday on the Mexican peso after that key reversal day that we discussed right here on the show on Wednesday. And again, the Mexican peso and volatility, they're moving together, right? So we really want to focus on these emerging market currencies. You know what I was going to do, Strazza? I was going to kick it right off with currencies, but I thought that was a little aggressive.
They were right at the top, though.
It was early, but I had to push it down because some of the newer folks are going to be like, "What is this crazy guy talking about? Mexican peso, right? Polish zloty." Obviously, people have been around for a while, know how we roll, but I wanted to ease into it a little bit, so I kind of waited until 10 charts down. That's fair.
Help people understand. Yeah, I think it's fair. Help people understand why we're even talking about this. So why do we care about emerging currencies? Are we making too big of a deal over the CEW chart? What do you get from it from an information standpoint?
I mean, why don't we just throw it up real quick here? Izzy, why don't you throw up the new slide 2? New slide 2. So this is what I'm looking at. So here's the Colombian peso, right? Pushing up against those highs. Little failed breakout, right? Keep going, Izzy. So there's the Polish zloty, again, failed breakout, right? These are warning signs for risk assets, right? In my experience. Keep going. So there's the Brazilian real, couldn't even make a new high, tried to break out, failed, right? And then keep going. And then, of course, you've got the Mexican peso, which couldn't get up to those former highs, right? So these are, when I look at Mexican peso in particular, this is like the bellwether of emerging market currencies. Go next. Go next. And then here you could see the dollar peso overlaid with the volatility index, and you could see that 3-month rolling correlation in the green. So essentially, as the Mexican peso rises, that's good for stocks. Volatility decreases. US dollar is weaker. When the Mexican peso is weaker and the dollar is stronger, you're getting lower stock prices, you're getting elevated volatility, right? So that's why we're so interested in these emerging market currencies. It's really just an extension of the dollar, because if you're looking at the dollar index, 60% of that is euro, right? So yes, the euro represents a big portion of the United States dollar index, but to say that the euro is the dollar, we know that that's not true. We want to look at other currencies against the dollar to get more information. Yes, dollar index is a lot of euro, but it doesn't mean that the dollar is a lot of euro, right? There's a difference.
I have a good analogy. We could look at Apple, right, and say Apple's really important. It's going up. The S&P 500 is probably going up, right, because it's such a big weighting, just like the euro is a big weighting in Dixie. We could also look at ARK stocks or small cap stocks or high beta stocks, which have close to no weighting probably in the S&P 500, and say, oh, they're going up. That's good for the S&P 500 because we're assessing risk, even though it's not maybe in the index, right?
No? Throw up the new slide 2 there, Izzy. New slide 2 there, so you can see that negative correlation between the U.S. dollar index and the S&P 500. But let me reiterate that because the U.S. dollar index is a ton of euro, it's not telling you the full story. You go one by one. You're looking at the Colombian peso. You're looking at the zloty. You're looking at the Malaysian ringgit, right? You're looking at all of these to get a weight of the evidence perspective on the overall dollar. And, they nailed it. Last year in October, emerging market currencies bottomed at the beginning of October, rallied throughout October, well ahead of that monster rally in equities in November and December. All you had to do was watch the zloty, and you nailed that fourth quarter move in equities, right? So that's how I look at it. So this is that negative correlation, and Louis chopping at the bid, saying nobody cares about the Colombian peso. Give them the crypto. All right, let's do that.
I want like all-star charts shirts with something about the Zloty on it for when I travel.
All right, done.
You
Talk
know?
to Giancarlo. This is
It's
above my
Zloty.
pay grade. Izzy, hit it.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Oh,
Morning, guys.
we need a longer Louis bumper.
You excited to talk about crypto in New York?
Am I excited to talk about crypto in New York? I'm
Oh
excited
yeah.
to talk about a lot of things in New York. Crypto is certainly one of them. Louis Sykes in the house. Let me tell you something, Lou Dog. This ETH BTC is no joke, man.
Look,
Like,
the
am I
market's a
making, like,
forward-looking discounting mechanism, right? So you got that ETF approval. Turned out it was another sell in news. Alfonso, I dropped a chart for you, so I want to show that. And Bitcoin has this tendency to cool off during these traditional financial product launches.
All right, so talk to me. What's going on here? We got all kinds of stuff: Coinbase IPO, futures launch, options launch. Talk to me about what happened here. What am I looking at? First of all, we got to label this. What is this line?
That's Bitcoin.
Well,
What do you mean? What is this line?
Why doesn't it say Bitcoin? What kind of half-ass label is this?
I feel like it goes without saying that this is Bitcoin. If you don't know this is a Bitcoin chart, then
I wouldn't know. I mean, it could be the Zloty. I don't know.
Tell him, Louis. You know what this is.
Louis,
You know exactly what this is.
Louis, you got to step up your labeling game. This is unacceptable. Unacceptable.
Well,
Crypto
look.
Friday's not even labeling the first chart.
Oh.
It's rude.
All right, shut up. Let's talk about the chart. Look, so during these traditional financial launches, you had the CME futures launch at the pico top of 2018, market collapsed. Right before COVID, CME launches options, market crashes, Coinbase IPO, feeding into that sentiment right at the April top of 21, market crashes. Same with the US futures ETF launch, and now with the US spot ETF launch. And on the flip side, what I didn't include in this chart was that when the Bitcoin short ETF came out, there was at the bottom as well. And so
when was the short ETF launch?
Yeah,
it wasn't after the FTX collapse. It was more so after the Luna and 3AC collapse, which
of course, unbelievable.
Yeah.
Wow. Is it still around?
Mark that up and drop it in the Slack, Lou.
Is it still around, Louis?
Yeah.
It should be. But look, a lot of these there's a lot of these incidents in crypto, like Riot Blockchain. They rebranded away from Riot Blockchain to Riot Platforms on the exact day that the stock bottomed. The exact day.
I love that. It's a beautiful thing. Okay, in each of these instances, Bitcoin got hit hard. For those who are unaware, this is a chart of Bitcoin.
But I don't understand. Are you calling a top here?
No, I'm not saying anything. I'm just making an observation.
Well,
he's observing, Strazza.
I'm observing the chart, and it seems like you're calling a top.
Is he putting words in your mouth?
No, I'm just pointing out. I'm just pointing out what's happened historically. I'm not saying anything.
Okay, well, then what are you saying?
Listen, there are events that are probably not labeled here that wouldn't have worked this perfectly. Is that fair to say?
Well, these I would say that these are the most major significant.
Yeah, he's not cherry picking events here, Strazza.
No, I know. These are the big ones.
Okay, so then what do you think? Because these were major sell-offs in all of these events, and so far, it's playing out. How bad does it get?
I think when you look at the derivatives market, I want to pull up some charts here. When you look at the CME open interest, that's really skyrocketed over the last 3 months in the lead up to the spot ETF. And so you can see
which slide is that?
The amount of
slide
14
14
is on the screen right now. And so in the lead up to the spot ETF, open interest on the CME really jumped. And if you break that down into who was buying, if you look at the futures positioning, I shared a chart as well. You can see all that buying was coming from asset managers. And so they were essentially using the Bitcoin futures as a spot proxy in the lead up to the ETF. And so I think now you're going to start seeing those contracts close. So it makes sense that You know, there's been over 13,000 BTC contracts open over the last 3 months on the CME. So it makes sense that the market churns as a lot of those contracts begin to close out, which is what we're seeing right now.
I like how
And
nicely
so
you labeled
I'm viewing this more as, you know, I'm going to use this term just because JC hates it. I'm just seeing this as another garden variety bull market pit stop.
Oh,
Yes, he says it every time he comes on.
I just I just say it just to see the look on your face.
garden variety. Oh, you're too young to say.
We got to
that.
get an All-Star Charts garden variety shirt.
Yeah.
Oh, can we not? That's
we got to get
disgusting.
I want to get Jason Shapiro back on to talk about the positioning here.
I want a shirt that says not garden variety. Something like that. Louis, so we had a great conversation yesterday in this meeting. Strazza, by the way, very jealous that he was not a part of that meeting. Very jealous. So we're just going to let him cry about it. But for you and I, who were fortunate enough to be in that meeting, what stood out? So yesterday we had a meeting, an internal team meeting. A bunch of us were in there. Meltem Demirors joined us. You know, she's got her ear to the ground. What stood out the most from what we discussed yesterday?
I think Meltem's point of view, she really argued the utility of looking at flows and how important flows are going to become, particularly as the Bitcoin ETF has really become quite dominant. You know, the assets under management of these ETFs already is really quite significant.
Yeah.
And so I think there's an argument to be made as well that as the investor profile of Bitcoin changes from the Wild West back, you know, 5 years ago to what it is now, where we are now at the pretty much at the end of Bitcoin's maturation, I think there's a case to be made that Bitcoin's volatility is going to diminish, particularly as these ETFs get more prominent in the coming years.
Yeah, because all the ARBs get ARBed out essentially, right?
Yeah, exactly. And these investors aren't, you know, day trading, they aren't leverage trading, they are just buying Bitcoin and sitting on it.
I really thought it was interesting the stuff she was saying about the ETF AUM so far. So, you know, when new ETFs launch, you know, when you look at AUM, these are off the charts, like off the charts in AUM from an initial launch for the ETF. So that was interesting. Number one, getting that perspective. Number two, getting the actual hard numbers. 700 million, is that the number on a net basis? So you've got like 1.7 or so of inflows into these ETFs, and then you got about 700, almost a billion in outflows from the grayscale, right? Because it's not necessary and it's super expensive. So on a net basis, as of yesterday afternoon, you had about 700 million in net inflows since the ETF announcement. So close to a billion there. You know, we'll see how the numbers end up at the end of the week. But yeah, close to a billion, which when you look at other ETF launches is really just such an outlier. I guess I hadn't quite thought it through until she kind of pointed that out. I thought that was interesting. I guess I'm not that surprised by that. Are you?
No, and you know, another interesting point that she made was the point that she made regarding ETH and how she wasn't overly bullish, just because there's a lot of competition. She said within that space. The market seems to be doing the opposite so far. It'll be interesting to see whether this trend in ETH BTC continues.
Talk to me about the dominance. Talk to me about the dominance, Lou, because I'm seeing Bitcoin dominance hitting new 3-month lows as we speak. Meaning, in other words, the percentage of Bitcoin market cap as an overall percentage of total crypto market cap making new 3-month lows. So, in other words, the rest of crypto being a larger percentage of the overall. I mean, is this just an ETH BTC story, or is there more to it, you think?
Yeah, so ETH and Bitcoin, they make up 63% of the market cap of crypto. If you include in all the stablecoin market cap, that jumps up to 75. Really a ETH BTC story. So when you look at ETH BTC, you know, we had that really nice thrust, and now you've had over the last few days. Price action has really just been flagging, and now you seem to be almost getting a resolution from this bull flag that's formed over the last few days. And so
You think that
it's
resolves
almost
higher?
surprising, right, to see. I mean, it's resolving higher right as we speak. And again, there was a chart that you retweeted this morning. It's interesting to see how much ETH is outperforming, particularly as Bitcoin is selling off. Generally, not always, but generally, ETH tends to outperform when the tape is bullish. And so for it to not do that,
So
it's interesting.
This comes from our friend Caleb Franzen. Who the hell knows where on earth he is these days? Italy, maybe? He's been traveling for like, this guy's been traveling around Europe for forever. So walk me through what Caleb was sharing here that I retweeted.
Yeah, so as I said before, ETH tends to outperform in a bullish tape. And so it's interesting here that Bitcoin is clearly selling off, but ETH is still outperforming. That's an outlier. Again, it's that this relationship isn't completely strong. Like that there are times where ETH does outperform when the tape is bearish, but it's still an outlier nevertheless.
So now that we've digested all of this, Bitcoin ETF announced, 10 of them, the whole thing. We've seen the implications of that. Sell the news, right? That's probably not a surprise. To me, I'm most surprised by the strength in the ETH BTC. So now that the dust has settled, that's what stands out the most to me out of this whole thing. It did from the beginning, right? Immediately you saw that, and it stuck the landing. So now what?
I think if you look at the Bitcoin weekly chart, I want to pull up that chart. I think it's important that in all this noise of the ETF, that it's important to zoom out and just identify
17 is
basic, just basic levels. And so, we had that false breakout above 46K, and the market's churning. After the run up that we had, it's not surprising at all to see that.
The Ethereum equivalent is about 3,500. No?
Yeah.
Right? Those kickback highs in 22, that's 3,500 for Ethereum. Ethereum right now is at what? 2,400, no?
Yeah.
2,500. So we got another 1,000 points in Ethereum just to get to what Bitcoin just got to. Do I have that right?
Yes, sir.
Can Ethereum get to 3,500 while Bitcoin continues to churn below this 46, 47?
I think all ETH and all the altcoins need is for Bitcoin not to crash. Like if Bitcoin is just churning sideways, sure, we can say that.
So
and
you don't think there's any chance of a kickback back to 30?
I'm not saying that.
There is a chance. In that scenario, you back up the truck, flip the book.
Hell yeah, you do. YOLO long, Strazza the chief YOLO officer for 2024. So
what are the chances
sure
we get all the way back
in
to
the
30?
Buying.
You think it's a high chance we get back to 30, or you think it's a slim chance?
I think short-term patterns are about to resolve lower in too many of these. I'll steal that answer. You know what I'm doing?
Hold on. So when do we buy Bitcoin again? A close above 46, 47? How do you define a close? What do you guys think?
I'm not looking to buy Bitcoin. I have my Bitcoin. If it's back at 30, maybe.
Hey, definitely. You know what Meltem's trade was? And I don't want to keep putting words in her mouth, but she did say that she's been buying the miners.
Yeah. I listened to the whole call. Okay. I heard everything.
Strazza had a little FOMO not being in the call. What are we doing? You playing golf?
I know what you said. I know what all of you
golf?
said.
So she was buying the miners and then fading the miners into the halving. You like that trade?
And then buying Bitcoin. And then buying spot Bitcoin.
And then buying spot Bitcoin. Yeah. I don't hate that.
The halvening is, in my view, a lot of it is complete nonsense. When you look at the annual issuance of BTC, it's only about 6% of the total active supply. And so it doesn't seem like it has much of an impact on price action.
So now after the halving, it's going to be 3%? Is that right?
The daily issuance is probably is going to 150 BTC.
All right. Happening, the spot ETFs, that's enough. What I'm doing is I'm anchoring VWAPs from the fall lows. Hear me out, Louis. All these altcoins.
You're so angry this morning, Strazza.
All of what year?
September, October lows from last year, right before the automatic reaction into year end that we had. If those VWAPs start breaking, too many of them, I'm making a list in my chart book.
Are you checking it twice?
Yeah, checking it like every morning and night. If they start to break those levels, you're going to get further corrective action, and you could buy at maybe more favorable prices in a few weeks. So I think like maybe they dig in here, but a lot of them, I sent you a couple, Louis, are like right on the brink here. Algo, Elrond, Atom, Matic. You don't want to see those VWAPs go. Then I think maybe you do see 30.
I disagree.
I like the ETH BTC looking for a breakout of that ratio. I don't disagree with Strazza. Some of these flags start breaking lower. That would be a concern. I got to see it though. Lou, I appreciate it, brother. I've been getting a lot of Louis.
See you guys in New York.
A lot of Louis this week. Even more Louis next week. I like it.
Hey, I'm looking forward to it.
I will see you in. I will see you in the Marcy. It's a lovely part of town called the Marcy Projects. So just have the Uber driver drop you off there.
You're not funny. Terrible.
All right, Lou. Keep up the good work, buddy.
See you soon.
Adios.
No, we're not meeting in the Marcy Projects next week.
You know, how bad would you feel if that actually happened?
Izzy, bring in Howard Lindzon. Let's have a few laughs. Howard, come on.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Lindzon. What's up,
Hello.
man?
It's early.
You look like you finally took my advice and started smoking weed.
It feels like my eyes are like bolted shut. Hang on, let me get a stick. Hang on, I'm gonna open up. What the hell's going on? It's so
Ladies
early.
and gentlemen, this is Howard Lindzon. Needs no introduction. You're like you're always rocking gear from companies you're invested in. You're like a walking billboard for social leverage investments.
Well, there's that, or you got this.
Yeah. You're probably right in your decision making there. Lindzon, one of the things that I always like to ask you about.
I've had this mic for like 6 months. I still haven't set it up.
I got the same one. Nice.
Listen, one of the things I like about Howard is that Howard talks to a lot of people, right? Howard gets a lot of different perspectives from, the worst VCs, the best VCs, technical analysts, fundamental guys, founders. You have a very wide range of friends and connections. So I'd love to hear your thoughts on, some common themes that you're hearing, some of the things that interest you that you're having in some of these conversations.
The common theme. Well, the first one, the common theme is people see me on these things and they go, he looks a lot older than when people see me in real life. They go, you look a lot younger than you do on video. The biggest common theme I'm seeing, and it's an important one because, like you said, I talk to a lot of people. And that is my job. I'm a salesman. I'm not very little skill beyond being a salesman, but it's a great skill to hone over the years. But people do, for some reason, talk to me. They take a liking to my silliness or joie de vivre. But there's very simple rules that I have when talking to people. I try and align, there's sentiment reports for you guys. You read the mass sentiment. For me, over the years, I've developed some friendships that some people that are right a lot, right? And you have that in the stock market too. I have it with you. I don't need to talk to 1,000 people. I need to talk to people that I know get stuff right. And then I my spider tingly senses go off, good, bad, indifferent, and I want to dive in, I get to go to, I don't abuse it, but I go to the people that I trust because I have my own spider tingly senses going off, and I want to lay of the land. In venture, where I spend my day job, I've really not enjoyed the last 3, 4, 5 years, because I knew we were heading for problems. There's a lot of bad behaviors, a lot of stupid ideas. No one was focused on profits, and the valuations mostly. So to see over the last few months some of the best investors I know that don't have to come out and pick a side, come together on the the bullishness around energy, especially nuclear, AI. And this is Michael Parets, Andy Kessler, Malik, Fred Wilson, Chris Dixon. When the stars align around the right people, getting bullish on stuff, that gets me excited.
You like Chris Dixon? You like him?
Well, I mean, he's an LP in our fund. He's very smart. We don't have dinner.
He won't have dinner with you?
I'm not saying I've asked.
Because I like Chris Dixon, but sometimes you throw out some names. You're like, he's part of the criminal enterprise. I'm like, well, I thought he was smart, so I'm surprised that you like Chris Dixon. All right, I like him too.
Yeah. So if you were to ask Fred Wilson who the two best investors he thinks are, Chris Dixon pops into. So when it's like me asking you who you like. If you ask Fred Wilson who he likes and he says Chris Dixon, you put aside what you think and you think, first of all, I do like him.
Is that what you did? You put aside what you thought and then you started to like him?
No, I already liked him. And he has a new book out, and StockTwits is in the book. So I actually.
Does he? What's it called?
Yeah, it's called. It's about. I forget the name. I just ordered it, and I never order books. But
why don't you order books?
Hold on.
People just send them to you.
Yeah, people do send them. People do, and they sign them. But to keep on point, the people that are saying they're bullish, Jim O'Shaughnessy, the people that are not just saying they're bullish, they're expressing it with risk, and they're taking chances, and they're putting their reputation on the line because they're rich. They don't need to say it, and they don't have a habit of pimping things. And everybody's, we all are pimping things, and a lot of us disclose that we are involved. But when
we were pimping out Koifman yesterday,
and
he did a great job.
When you're pimping out stuff, and you don't need to be pimping, and it makes sense to pimp too, and you're seeing it show up in stock prices, you got to take notice. So especially people that skip crypto, right? There's a lot of very smart people, not Fred Wilson and Chris Dixon. They love crypto, but a lot of the people that I looked at, Malik, Andy Kessler, Michael Parets, took a whole Brad Feld, just skipped crypto. Okay, but now all the people that skip crypto, including the people that were in crypto, are aligned on AI. They're not telling me that it's good or bad or ugly. They just say it's here and it's pretty impressive. And so then you dig in one layer deep, and they go, hang away from the software, focus on the chip companies. So when not only when they do that, but when they tell you how they are investing for the next few years, you take that seriously. So it's helped me get into the semiconductor index the last year, and that's been helpful. So that is very helpful, and I apply that strategy to pretty much all my investing. I try and find a group of people that I trust that have done this well, that do this for a long period of time, and I try and get to see the alignment. And it's a very boring top-down approach, but it has worked for me.
How long did these cycles typically last? You talked about how it hasn't been a good time for venture, hasn't been a good time for private equity, not a good time for new public offerings. How long do these bear cycles typically last? And then does private equity typically lead public equity markets, like out of these cycles? Like, what should we expect first? new IPOs to pick up or PE activity and deal making to pick up?
Well, it's kind of only my second cycle, so I can only give you my experience. So, I was a hedge fund guy. I was a public stock market guy pre-internet. When we all had books of charts and we waited for them on a Friday and we had to go through them and we had 20-minute delayed quotes. But then Web 2 came along, and Web 2 was YouTube, Twitter, Facebook, LinkedIn. And at that time, things just made sense to me. YouTube made sense to me, and I went down the private market rabbit hole. As luck would have it at that time, not only was it a good idea to go down the private market rabbit hole, the prices were ridiculously low because we were coming off a bear market 4 or 5 years of internet stocks. So no one wanted to own internet stocks. So it was like a perfect time both because the market was exploding because of network effects, which very few people had heard that word. The internet was great because Internet One onboarded people, but YouTube was the beginning of network effects. Like if you projected yourself onto the internet, millions of people could see you.
Yep.
And so that combination combined with low prices, combined with like a long bear market, and it was an incredible time to be a private market investor. So a lot of things happened at the right time for private markets to be good. I was in the right place at the right time. The only thing that I had to do was write checks. And luckily I wrote checks. Okay. 2019 comes along, pre-2020, and you could feel the markets getting silly, right? SoftBank, a bunch of people were writing crazy checks. The beginning of Tiger, everybody wanted to be a venture capitalist. And then March 20, COVID, and I think people thought that's it. Like, we're going to be locked in our home, yada, yada, yada. The opposite happened. Not very many people predicted the opposite would happen. And not only did we have a bull market, everything accelerated, right? We were living in our homes and everything, all the technology that we had been hunting and gathering and building became more important. Yeah. So we had this pull forward and everybody, it's like a car accident. People woke up in April 2020 and were like, I thought I was supposed to be dead. Not only am I not dead, I can have food delivered to my door and and I don't have to go to work and I still get paid and the government will get it. I don't have to pay my student loan. It was like a fucking nirvana for like meatheads.
Yep.
And that prolonged what would have been a normal cycle. So now we're paying the price for ZERP and all these things and overabundance
and the stimulus, the pandemic stimulus gets forgotten.
So of course, like it stretched what probably was going to end in like 2019 for another year and a half, and it led to banana behavior. From SPACs to FTX to continuing fraud to this day, and to the lack of a business model. Okay, so the most important thing to come out of this, we went through 10 to 12 years of we will fund you. Don't worry about your business model. We will fund you. Get to 1 million users. Get to 10 million users. Open China. Those are not things that were normal pre-2005. Now we're getting back to the other. What? Now we're getting back to the opposite. If you told your VC, I'm going to go into China, your VC would say, you're a fucking idiot. We're not giving you money to open China. And you're going to say, but Uber did it. So we still have to unlearn a lot of bad habits. The cost of money is obviously teaching that lesson at a very rapid rate. The high cost of customer acquisition. You can't go on YouTube and say I farted and get 1 million users. So you have a combination of high cost of money, high cost of customer acquisition, the shrinking of the world, right? And then you have competition, right? Like I can earn money in my bank. So all those 4 things have made capital scarce when they were just incredibly capital abundant. And so you have to unteach that. So now the founder that walks into your office not only has to have a good idea, it has to be a business right from the get-go. And how many people have those ideas? Not that many. And then if you have that idea, it's not as exciting as the business that's going to require $40 million and you're 1 million users. So that's the world that we're working through right now. And then as to the IPOs, it's very hard to have great companies ready to go public when for the last 10 years, those companies were completely building things not built ready to be public right now because they're not profitable. They are overstaffed. They don't have the right culture. They've kind of been built improperly. So you have this kind of scattered world where there's just not a general progression of like things that used to happen in markets.
Howard, it's been a tough time for growth stocks. Bond market and interest rates get blamed a lot, right, for bringing down the valuations of these, speculative tech companies. How much do you think the geopolitical events and the deglobalization efforts that we've seen for several years now weigh on the valuations too? Because it really
What is deglobalization? What does that mean?
It affects these companies.
Being an unracist. It's unracist.
Unracist?
Yeah. It's the same thing. It's deglobal. I mean, I think what he's saying is I say deglobalization means, why would I open a Chinese office? Right. I mean, I've been there. I didn't like it in the best of times. So I wasn't ever thinking of opening a Chinese office, but I think what he's saying is you can't just go do what you did 12 years ago and like open Uber for China 2 years into your business.
The total addressable market used to be the whole world, right?
Yeah.
For you guys. And it's
Correct.
no longer that way, it seems.
It doesn't have
That's
to
what he
be.
means. I think that's what he means. The TAMs are shrinking.
And that's okay, right?
Yes. Correct. TAMs are shrinking. And this goes to my luxury and degenerate economy things of taking. The TAM that you focus on better have good margins. So that's my, JC and I talk about this all the time. When TAMs are shrinking, think about who's got the easiest way to own TAM. Walmart. The people that own TAM before are going to get better at owning TAM. Okay, total addressable market. The TAM that I want is the TAM that Walmart just won't get, right? And the TAM that I want are the luxury people, the people that are building stuff with stories, building stuff that people want, building stuff that their customers won't complain that they're getting ripped off. So it's a whole new way of thinking, right? And
Howard, what about this whole idea of, for many years, like you got to get to $1 billion valuation, unicorn this, unicorn that. I've been hearing more and more about just build a great business, 50 million, 100 million, great margins. Like, how do you feel about, are you hearing similar things? Like, and not everything needs to be this $1 billion monster, that there are good businesses in that 50, 100, 150 million.
Yeah, and I think this is why public markets it's going to be some great, the indexes work. I mean, in the market, everybody, I don't want to question whether like indexing works, because it works. The way our system is set up for giving money monthly to your IRA, blah, 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 401k. Okay. Certain things just are rigged in the favor of markets, corporate profit, the way America thinks. In the way that investors think, it's just competition for capital, right? If I'm earning 5% in cash, the idea has to be a little better for me. And if I'm earning 30% in the semiconductor index, or think I can earn 30% in the semiconductor index, your venture idea better be damn good.
Yeah.
And so the only thing missing in this private markets, I assume would price much faster, is prices haven't come down. And I can only say that prices haven't come down to where people like social leverage like to invest, because there's so much money raised that has not been deployed. And eventually that will happen. So what happens is Y Combinator, Andreessen, Index, all the great funds were out there raising capital while the market was still imploding. And so they're loaded up with weapons. It's like, how does Israel fight a war if they can't get weapons? They were stockpiling weapons for a long time. How do the VCs continue to overpay for stupid ideas? Well, first, they don't care about their LPs at some level, because their LPs are institution. Secondly, they get paid for putting that money to work. And thirdly, if they pay 5 on 30 versus 5 on 25 and take 15% of the company or 10% of the company instead of 20% of the company, do they care? Do their LPs really understand what's happening? Because they're investing for 10 years and they're not thinking like about their LPs. Me, I want to return capital. So at the seed stage level, guys, when I invest in a company, I have to, the money that I make for my LPs comes between the seed stage and the A stage. The expertise, just like you, when you put on a trade, you need it to work pretty much right away because there's so many choices for you. When I put on a trade, I need it to work right away because I'm going to be stuck with this thing for the next 10 years. So I need to make as much money in those first 2 years, the highest risk parts of the company. So if I invest in a company at 15 million valuation and the company executes, but I've overpaid, and 2 years later they raise it $15 million, I've been doing charity work. Okay. And I have to explain to the founders that you're going to go out in 2 years and raise money if you perfectly execute at 5 million. So I need to invest in at a 3 or 4 million valuation, or else I'm in the charity business. Now, for 3 years, those people hung up on me and called some other idiot VC that gave them their money. Okay. And that's why we're here where we are here. The founders didn't believe that you could offer value enough to take them from 3 million to 15 million. And so now that gap's starting to open up again over the last year, you can start to see the private markets because people along the way have to make money. Does that help?
Yeah.
Howard, before we let you run, I want to talk about community. People in the chat talking about how they were just on StockTwits years ago, kind of just consuming and reading. Now they're, kind of becoming more part of the community. Like when you talk about all these friends you have and all these people that you talk to and different experts in different fields, a lot of these people you met on the internet in a dating site for market nerds, right?
Still do. Greatest thing I ever did was start StockTwits. Also the biggest pain in my ass. So I think that just proves the point of being an entrepreneur, right? I'm really, really proud that I started because it still exists 18 years later. It's not exactly in the image.
Is that the number? 18 years? That's the number?
Yeah. So it's not it's a community. So it's not in the image you always want, but you can build gates, you kick people off. We run it the way I would run a community, not perfectly. And but at the same time,
that's Chris Dixon inviting you to lunch.
Yeah. So the thing is, everybody there wants to learn about the markets. There's obviously the 1% of people that just are there to stir trouble up, right? It's not as big as, So the fact that there's so many like-minded people that are like sharing ideas has always been something that's interesting to me. And it continues on to this day. I think video is probably, this is pretty cool. Like, I know you guys have been working on this a while, but video is the next, to me, great bastion because I don't want to talk to everybody. That's why we have Trends with Friends. There's a group that you curate that knows how to do their work in a certain way that helps you take 4 hours of work and take it down to 30 minutes. That's just the gift of of manicuring or managing or grooming your network over the years, right? The fact that other people can watch us do our work in real time that's been compressed 8 hours is really why people who complain about how things in the world are really just not really participating. Because if you're participating, workflows have made it so that you can learn, 500% more in 50% less time. I don't know like the actual quantification of it, but I mean, we're all compressing time because of the networks that we build, and that's kind of the joy.
Yeah, I mean, listen, we do this morning show. It's great. I mean, we're doing what we're doing anyway. What are we doing? Checking market futures, checking the SEC filings from the day before, what's moving this morning, earnings, bring on our friends, talk about the market. I don't know if you know this, but the day I met you was the StockTwits TV party down in Soho.
Yeah.
Upside Trader was there. Like there was quite the cast of characters. You were ahead of your time, Lindzon.
I say that's the hard part. How do you get rich? You get lucky. You're born rich. I was a little bit born wealthy. I'm lucky. I was born on third base. So it's take that with a grain of salt. But you get rich too by getting the timing right. Like people don't respect the fact that they got the timing right, and that's when we get mad with people, right? Like it's okay you went to Harvard, it's okay you worked at Facebook, but it's those people that like forget, like they just tell you they're smart. No, I mean certain things align during your life. StockTwits came along at the right time. I got into investing at the right time. It still was my idea. The dollar sign, all the other stuff was great. But StockTwits TV, the blog network, we made a lot of mistakes because I didn't trust my own instincts. You had great ideas. Josh Brown had great ideas. And I just, because the timing wasn't right, I gave up too soon on TV, or I gave up too soon on a blog network. And boom, like 6 years later, like, of course. Like, we were just 6 years, 8 years too early. There's nothing worse than being too early. And that is part of the joy of startups. This is why something old is like something new, because great products stand the test of time. And some products just need technology to come along to get good. Like, we couldn't do this show this well, this easily, with 3 panel guests and like comments on the left side. I was in the green room. This is pretty cool software. Like, if we had this software when I wanted to do StockTwits TV, StockTwits TV would still be going. But it was so crude and rudimentary 15 years ago.
It was tough.
But
the parties were great.
So what are you saying,
I remember
Howard?
doing tequila shots with Lindzon used to drink tequila, and we would rip shots during the day.
Some last night. But here's the thing. What do I think now? I'm super bullish on stock, like this idea, because you guys love doing it, and the interface for which you can do it exists.
Yeah.
Now you just have to figure out what's the right time of the day, who are the right guests, what's the right format, what's the right production. I mean, it's not easy, but you guys are very much around the hoop, and the hoop is on a court that millions of people could watch if you put it together properly.
Yeah.
And so there is a chance to hit gold. When StockTwits TV happened, we would have had to have survived all kinds of technology changes and all kinds of bad products, and it just wasn't there. And so I would say my biggest miss is not sticking with YouTube, because that seems to be the one network that is still ripe for the type of stuff that happens right now.
I mean, a huge percentage of the population gets their investing information off YouTube. I mean, it really is wild when you see some of these numbers. And yeah, maybe some things work, some things didn't work, but we made a lot of friends. And hasn't it been cool to watch some of our friends kind of succeed and blow up and turn into, legends? Like, we've had a front row seat to some of this stuff. It's been cool.
Front row seat. If you can't get joy in your friends doing well, I mean, it's a shame, right? I was just saying, I was because of my blog, to see you sell your company, or to see Josh Brown hang out with I'm having dinner with Josh and Batnick in Vegas at Carbone's on Monday.
Nice.
In Vegas.
Bull market. That's a bull market dinner right there.
It's a bull market, high calorie dinner. But what I'm saying is to still just be, you see athletes hang out, and they've been athletes, and you'd love to be in that conversation, and they're with their old bros, and you got to know they're just acting like they're not talking about the game product, they're just talking about their friends. So for us, it's just hanging around with people that we know, get spotted in the street, get people say hello, that are somewhat famous in their category. And to go back, I haven't seen Josh in a few months or 6 months, or follow me or Batnick, and just be able to go have dinner and just talk like we're buddies, because we're buddies, is part of the whole joy. The other night, the Emmys were on, and I'm friends with Robbie, who's one of the founders of A24, who makes every movie, right? A24, I didn't know who they were. Now you know who they are, because if you watch Netflix or you watch HBO, you end up saying that. And they were up for the movie Beef, and Robbie got an Emmy, right? He sends me a text from, the state, and he's sitting with Matthew Millam, who you've met, who's Amazon Studios, who was up for Daisy Jones and the Six. And so two friends of mine now are friends because I was friends with them, even though we're not in the same industry, just because they read my blog and watch the show, because they're into the markets, and they get off stage and are texting idiot me a picture of them in one of their great moments winning an Emmy. And I'm like, that's pretty cool. So it's kind of a nerdy story, but it's also exactly why I love my life, which is take joy in seeing my friends do well. And so we live in this era now. I'm 58. It's normal that a lot of my friends are doing well, and it's fun to see.
Why don't you plug your new film? I got to watch it.
So the new film is really proud of it. It's my only film, I think. It's called This Is Not Financial Advice, which is a great title. And it's really an incredible, timeless story of fear and greed, based around 4 people that were trading crypto at the heat of the crypto. We followed them for 2 years. As luck would have it, we caught the rise, we caught the fall. And it's just that it's a horrifying, it's almost like a horror film, because us as investors and traders who have been through a few cycles absolutely know what's going to happen. Mm-hmm. First of all, because we know what prices ended up with, but more importantly, we are familiar with these characters 10 minutes into the movie and go, that fucking guy is screwed. So it's like watching this train wreck unfold. So a little bit lucky, we caught 2 years of filming, which caught the up and the down. But it's This Is Not Financial Advice, and it's available on Amazon Prime. You can go to Apple TV and Google Play, and I think maybe YouTube. It's like $8. So enjoy.
I'm gonna check it out.
Nice. So go check that out. And then before you run, just wanted to confirm that we've got the right book. Is this slide 2? Throw that up, Izzy. Is this the right book that you were talking about that you actually ordered?
Yeah. Very good. It's a story of. It's really. He does a good job of history telling. I was part of that history, and StockTwits is part of that history, building on top of Twitter. And then he really has been early to Web3, the good, the bad, the ugly of it, obviously, the tokens. But, he believes this is the ownership part of the internet. It's not going to be for everyone. Ownership is not for everyone, right? I think people think Web3, I was promised this. Well, it's like home ownership. You were never promised. You have to engage with it and afford it and work your way to it. But this ownership part of the web is part of this decentralization. So, I think if there's one guy to speak to this and try and get, speak English around all these subjects, Chris is one of those guys.
I love it. All right, Howard, go do your thing. Call me later. I'm around.
Right. Thanks, Howard.
Adios.
Well, that was a truly fascinating interview, as it always is with Howard. I personally just learned a lot.
About what specifically?
I don't know. But
you don't know what you learned a lot about? We'll
find out in the future, I guess. But interesting stuff from Howard. I wanted to talk.
It's always good. It's always good perspective.
I wanted to talk to him about. We talked about the small tech companies, right, and the speculative tech, and the pond that he fishes in now. But Howard is also a pretty savvy public market investor, right? He has these legacy positions, as long-term holder in a lot of these Magnificent Seven mega cap stocks. And dude, I've been looking through some of these layoffs. Amazon just had some. Google had more. Not only are these mega techs going to be the ones who grow their top line from AI, but they're also the first ones trimming their expense lines with AI, right? Because not only are they the providers of it, they obviously know how to use it the best, right? So while other companies, these manufacturing and these value stocks, are going to have to hire Accenture or Gartner to teach them how to use AI to create, process efficiencies, right? And these efficiency improvements, they're going to have to pay consultants to do that. Google and Amazon and these big cap techs are already doing it. If you read the language from Sundar Pichai's memo yesterday, really interesting. Get used to hearing stuff like this. A number of our teams made changes to become more efficient and work better. Some teams are continuing to make these kinds of organizational changes, which include some role eliminations globally. He talked about a new workforce for the modern age or something like that. What I'm saying is there are far nicer ways to say robots are replacing people, right? So get used to language like this, but that's what they're saying. They right-sized their workforce last year. They had like 5 rounds of layoffs, all of these companies last year. The layoffs that are happening now, they're recognizing these AI efficiencies already. So what I'm trying to say is we're out here blocking JetBlue and Spirit Airlines. The real risk for these mega cap tech companies, frankly, the only risk for these mega cap tech companies is antitrust in the future. I don't see how they don't continue to get so much bigger than everything else. It has to be coming. I think it's a matter of when, not if, or they'll grow to the sky.
So antitrust is going to come in and say you can't keep merging and buying. And by the way, in a lot of these cases, they're creating new companies internally. They're not merging with anything.
Right.
So what are these antitrust communists going to do?
Make them spin off. Make them split up.
And they do that? They can do anything, right?
Do whatever they want. It's gonna get to a point where it's just gonna be too much.
So like the antitrust guys can come in and be like, all right, Amazon, you got to spin off AWS.
Yeah.
Like they can do that?
Totally. 100%.
AWS, if it was his own company, would be an S&P 100 company, right?
AWS would be, yes, it would. Definitely.
It's that big.
Probably top 30. Dude, it's huge.
Probably top 30 company.
Yeah. Here, throw up this meme. Friend of the show, Brad Freeman, Fonz, I just dropped it in. Throw this meme up because this is what's happening right now. And I don't quite understand why, especially in this administration. But this little meme is so good. Here, this has been the antitrust policy of this administration. Meme me.
Microsoft buying anything? Anyone else trying to buy something?
I mean, it's true.
Microsoft owns LinkedIn. Like it's just like so random. Like they just own right?
Yeah, dude. One of them's gonna buy Snapchat. One of them probably buys Pinterest. They're gonna keep gobbling up these little brands and franchises if the government lets them. Palo Alto. I was listening to their CEO. They're the industry leader in cybersecurity.
NW.
Yeah, I mentioned it, I think, last week. He was at Davos or something. I was just listening to a quick interview with him. And he literally said, we are the industry leader. We plan to be, at the forefront of every new trend in cybersecurity, right? We're going to build it internally. And if we can't, we'll buy it. That's how these guys think, because that's been the game plan. That's been the winning game plan for a long time now. And I don't think it'll last forever. But for as long as it does last, that's what these guys are going to keep doing. They're going to get so huge.
I mean, they're pushing 3 trillion now.
You were talking about what, 10 yesterday, 5?
Well, it's not anything that's actionable, but it's something interesting to think about. Like the companies that are going to be 5 trillion, which is the first to 10 trillion. Is it going to be the same companies? Right?
I think about it all the time. I always know. I think back to this when we did that video talking about Apple. I remember me and JC were getting ready to go on and do this video, and I called him. I'm like, wait. With that price target, you're saying Apple's going to be $1 trillion company? It just sounded so crazy. This was like 4 or 5 years ago, maybe not even. And you're like, yeah, look at it now. Look at it now.
Right. Like I hadn't thought about it until you brought it up and I started doing the math and I was like, yeah, I suppose so. Yeah.
So, and that's the way we're going to think about 10 trillion now until that happens. So we'll see.
How come there's not a lot of filings, a lot of SEC filings? There's nothing in the hot corner worth mentioning today. Is there some, and I've noticed a lot of Fridays I like that. Do they
blackout?
Oh, is that why? Because it's earnings?
Earnings blackout. You're not going to see many Form 4s.
So it has nothing to do with the fact that today's Friday and yesterday was Thursday, and more to do with earnings.
Earnings blackout.
Yep. Yep. All right. Let's just do a quick little rundown of the market. Dow futures are flat. S&P futures up 6 handles, about 10 basis points. NASDAQ futures up over 55 basis points, up about 100 points. Bond futures are flat. Gold's flat. Silver flat. Copper flat. Oil flat. Nothing going on there. Quiet day, muted. Dollar index kind of mixed. Yields on the 10-year sitting around just under 4.2%. And then checking in on the funny money. We've got Bitcoin down 400 points, down about 1%, down under 41,000. New 3-month lows as we speak for Bitcoin dominance. So in other words, the percentage market cap of Bitcoin as a percentage of overall crypto market cap, making new 3-month lows as we speak. Ethereum here up a little bit, just under 2,500. And I know we didn't mention Solana earlier. Solana hanging out under 100, right around 92, down 2% on the day. The Ethereum BTC ratio, again, continues to stand out, up another percent today. Hanging in there, looks really, really strong. That's the biggest thing happening in crypto right now.
Listen, this coil in Solana is going to tell you a lot, which direction it resolves in, because we've been straight sideways now for almost a month.
And you think that will resolve in the same direction as the ETH BTC, or are these two different conversations?
Different conversations. Totally
Yeah,
different conversations.
so.
I'm like I said, I'm watching the other alts for evidence. Solana's probably going to do something similar, but I wouldn't expect that some flags are resolving higher while the rest of them are going lower. Maybe injective protocol, because that thing seems to always be going higher, but for the most part, they're all going to move in the same direction.
Dude, these consumer staples, again, just continuing to just struggle. We talk about the things that are working. This is working, that's working, this is working better than that one. I really like paying attention to the things that are not working. You saw utilities yesterday made new all-time lows relative to the S&P 500. This goes for utilities. Consumer staples aren't necessarily making new lows just yet, but they ain't going up. So low volatility, consumer staples getting no bid, particularly relative to the rest of the market. That's consistent with healthy market environments. I got to tell you, I would have thought that we would have seen more, a little bit more defensive rotation in the tape that we've had over the last month or so. You haven't gotten it at all.
You talk about how utilities outperformed. What bull cycle was it? The .com?
03 to 07. Utes were a leader.
The weak ass bull market. All right. Yeah.
Was it a weak ass bull market? Were you in junior high school? Were you even driving yet? Come on.
Yeah, I was in junior high school.
Yeah.
So I was thinking,
had you kissed a girl yet? You hadn't even kissed a girl yet.
So I was thinking when you were saying that it might be like index constitution, but no, I don't know. That wouldn't make sense either.
I mean, listen, it was a different environment in that period. Energy was doing really well. Financials were doing really well. Industrials, emerging markets were a commodity play back then. It was just a different environment. You had to be there. I hate to say it, but you had to be there. Like, I remember buying Mother Merrill. Like, the fact that we even called it Mother Merrill, right? You know what I'm saying?
Yeah. Merrill's catching some heat. JP Morgan too, about not doing Bitcoin things. You seeing all this fun people are having on the internet with Merrill and Vanguard?
I guess. I mean, they got bigger fish to fry. They don't have an ETF, so they're just haters because they don't have an ETF. I promise you, if they had an ETF, they would not be haters. They would be pumpers.
Well, they're authorized participants, so they help make the market, and they're doing stuff behind the scenes for these ETF providers. Maybe
Jamie Dimon does not want to talk about this anymore.
Maybe Jamie Dimon also just knows he doesn't want to compete with, what is his name, Papalari?
Maybe Jamie Dimon is Satoshi.
Oh God. He actually
that would be really cool.
He actually said on CNBC, I think it's going to go to whatever that number is in 2050 when they finally make all the Bitcoins. And then Satoshi's going to pop up on the screen and be like, they're all gone now. Like, he said that. He said that on TV.
I know. He is kind of the man. He is kind of the man. Yeah, he's kind of the man. Let's bring in the Fonz. Bring him in. Hold on. What was that? Fonz, what was that thing that you were doing where you had a microphone? What was that all about?
And the CMT last year in New York. Yeah.
And you were just holding a mic pretending to talk, like for video, or you were actually doing something?
No, I was actually talking to the camera, asking some questions for Giancarlo and Spencer.
Got it. You look good.
Yeah,
hey,
I look good. Hey, Steve.
Your background looks like you're like Milton in storage room B. Where's my stuff? You see my stapler? Alfonso, have you ever seen the movie Office Space?
No, we haven't.
He's got like that look in his face, like, I don't know what JC's talking about. Go watch the movie Office Space. And those of you in the chat, if you haven't seen it, go watch it. That's your homework for the weekend.
No, we don't want our hardworking employees. We don't want them watching that garbage.
Oh my God, it's such a good movie.
It's great. Yeah,
it's a great movie. Go watch Office Space. Trust me.
I will.
Fonz, tell us what's going on around the world.
Yep, let's do it. So I know JC early this week mentioned Asia, of course, the United States, and you made an interesting point about the stocks above the 50-day moving average. So I did the homework, and I bring this table. This is the percentage of stocks above their 50-day moving average, sorted by region and, of course, by country. So we can see Europe stands out the best with 58% of the stocks. But you mentioned China, Taiwan, and today I want to talk about Europe. Okay, so this is the first chart I bring. The Euro Stock 50 index, it's pulling back to former highs. Is it gonna be a false breakout or a false start? Are we gonna be back into the range?
I like how Todd Stone calls them speed bumps. I like that.
I like it. So I highlighted divergence, lower highs in 2021, and the S&P was making new highs. So I'm keeping an eye close to Europe, and especially to the 2021 highs, because I know and we understand that the most important sectors and industry groups in the United States are above those former highs. The Nasdaq and the Dow Jones are. The S&P is not, but I think looking at Europe and these European ETFs, we will have more like conviction of those levels. So let's start with a couple of countries. Here's Spain, being rejected the 2021 highs after briefly breakout. Here is Italy, the same picture. Overhead supply. Here's France. This is the fifth or fourth attempt to break out, and it couldn't. Here's the United Kingdom, stock below overhead supply. Here's Poland, one of the best ETF last year, getting rejected those former highs. And finally, I bring here Ireland. It's right there. So the charts look more or less the same, but the main point is this European ETF, the most important one, the strongest ones, are stuck below their 2021 highs. So that's caught my attention this week.
How many people are coming on here bringing on the Ireland ETF, right? Not seeing a lot of that.
The bottom line is in developed Europe, they all look the same. Here's what we need, Fonz. A scan with both our local universe and our USD universe, percent above or below the 2021 highs. And then let's count them. Let's see who's above and see who's below.
Hold on. What do you mean our local universe?
The indexes themselves. The CAC.
Oh, in local currency, you mean?
Yeah.
Oh,
because the locals look a little bit better. Like I was just looking at the DAX, holding on. CAC looks a little sketchy. The Italian Borsa is well above. So it'll be interesting to see how those differ.
I'm a big fan of the Irish pajamas.
What's the Ireland exchange? What's the local? What is it? I don't know.
It's the Irish Times Index. All shares, Irish all shares. That one.
I have to take a look at our list.
I've only been to Dublin a couple of times. I never went to the exchange. There is a Dublin exchange, right? Is there an exchange there?
I would think so. Finance is big.
He just kept bars. I couldn't imagine why. It's like we just left the bar. We're going to another one. Yep. All right.
There's a big finance culture in Dublin.
I mean, we're gonna hang out with Steven. We're gonna hang out with Steven next week. He's coming in from Dublin.
Nice.
He'll give you good perspective on things. So you could follow Stephen McBride at Disruption Hedge. Disruption Hedge, Stephen McBride. He's a CMT. And he's coming to hang out with us next week. He's got some other plans on Tuesday night, so he won't be a dinner, but he's going to come hang out with us Wednesday afternoon.
Nice. We're excited to go to New York.
Yeah, I'm excited. I'm excited you're here. No show, by the way. No show Monday, Tuesday, or Wednesday. We will all be in New York City together.
I can't.
And if you're there, good for you. We're going to have a lot of fun. If you're not there, Ooh, you're gonna have a lot of FOMO when you see the pictures. Lots of FOMO. So if you're not there, call Mary. Find out why you're not there. Izzy, hit that bumper.
Huh.
Recess. No? Come on, Izzy. Hit that recess. All right. So my recess is I'm curious to ask Steve Strazza.
Yeah.
Is it that you are most excited to eat when you come to New York City next week?
Pizza.
Pizza. Easy answer, right?
Pizza.
Yeah. You want to go get pizza Monday night then?
I'm trying to figure that out because I'm going to go out with Fonz and Louie on Wednesday night. I don't know what we should eat, but if we don't have pizza before Wednesday night, we're going out for pizza. If we have pizza before,
maybe
then we'll go out for something else.
Mary's a little disappointed the last time she was in town. We didn't get her any pizza. So let's get the pizza out of the way on Monday night.
Yeah, let's do that. Where should we go?
We'll go downtown.
Great. Okay.
We could do Prince Street. We could do Lombardi's. We can go to Brooklyn. You want to go to Brooklyn? Go to L&B's, Pomoni Gardens? We could do that.
That would be awesome.
I mean,
we got to take an Uber, though. I'm not.
No, we'll get a limo. We'll get a limo to pick us up, take us all.
That might be cool.
Yeah, that'll be cool. How many people do you think we can stuff in that limo? Can we stuff 30 people in a limo? No, that's too much.
There's a great pizza place in Brooklyn near where my brother lives. It's in Williamsburg. Le Industrie, it's called. Le Industrie.
Le Industrie. I'm sure the Italians love that.
It's Italian. It's Italian. I don't know where they got their name from. The guys from one of these places in Italy. It's legit. It's some of the best pizza in New York City.
Are we gonna have a second dinner? Are we gonna do a late night at Corner Bistro?
Yeah, definitely.
That's my move. Or we could do a late night at Minetta.
I'm not going to the Jazz Club. I would love to go to Minetta and try one of these burgers that everybody's always telling me about.
That Black Label burger in Minetta with the bone marrow spread in the burger. Ooh, it's a sin. It's a sin, Ma. It's a hoof. It's a sin.
So Ma. I got a good one. Listen, what I did the other day, walking around the docks, had lunch across the street, kind of moseying around. I'm with my buddy. He's like a captain. He's a big boat person. And he goes, "That's Mel Fisher's boat." Mel Fisher's a famous treasure hunter, right? So, okay.
They still got those?
It's got two of them. And
they definitely have treasure hunters in the Keys.
They look like they're like 200 years old. They're like this giant, just like steel or metal. Like they're enormous. They got these.
And it's for treasure hunting specifically?
Yeah. So anyway, we're looking around at the boat, and the one of the mates comes out and starts talking to my buddy. And then eventually the captain comes out and they're talking about treasure hunting and all this crazy stuff. He brings us onto the boat. It's called the Dare. I wish I could have took pictures. Not allowed to take pictures on it. The level of technology on this boat, I swear to God, the control room had like 30 screens. They have underwater cameras everywhere. Like it was wild. Like it was crazy cool. He's got
what? They've discovered some treasures and then reinvested that into the boat?
Wait, I'll get to that. So this is the boat that found the Atocha. It's some famous Spanish shipwreck from like the 1600s. There's like hundreds of millions of dollars worth of gold and precious metals. Right. So
and they found it.
They found it on this boat. Yeah.
Wow.
And the way that Mel Fisher's company works, it's a private company. They private investments only. And if you're an investor, you're basically making the bet that they find treasure and pay you a distribution. Like you can invest in this. We know the guy. If you want to invest in some treasure hunting, you could. But it's really cool the way it works. They have investors.
Only when there's an ETF. When they have an ETF for treasure hunters, I'll get involved.
On the boat, it was so cool. He's talking to my buddy. They're like talking about like trading gold coins for like old anchors that were found. And he's got all these, things that they found like hanging on the boat, just all decorated and decked out. It was really neat. So
that is cool. Well, next time I'm in the Keys, you can take me over. I'd like to check that out.
It was cool.
All right, guys, just a reminder, there will be no show on Monday, Tuesday, or Wednesday. We will all be in New York City together. Louis flying in from New Zealand, Fonz flying in from Venezuela, Strazza coming up from Key West, Ian in the house, Sean coming from Colorado. We're going to have quite the extravaganza, so I'm looking forward to that. All right, guys, that is our show for this week. I am JC Parets. This is Steve Strazza. Shout out Spencer. The Fun Police was out today, but Izzy, great job. Alfonso, thanks for stopping by. Great job. Louis, thanks for stopping by. Everybody have a great weekend. And if you haven't seen Office Space, watch Office Space. Great movie. Great movie.
Bye, guys.
Adios.
I can't take no loss. I don't even know what it costs. I hit the ground and it go